好，欢迎大家再度来到水星兔的频道。那今天要跟大家介绍的是这个 Apex 100万出金的交易员 Vince。那其实上个月 Apex 有来台湾，在 W Hotel 那边办了一个还不错的活动，然后我有跟他们的就是这位100万出金的交易员Vince， 那其实有录了一集的这个影片，一个访谈。那最近就在处理这支影片，那有一些我觉得还不错的东西，我就把它剪出来拿来跟大家分享。那今天这一集大概10多分钟吧，我印象中。好，那这边有简单讲到一些就是大家打单可以去做的一些技巧，那就是包含说你怎么去检讨你的交易，然后把获利目标平均的去分散，然后再来就是说如何你用这个停利停损的规则去躲开这个情绪交易。另外就是3胜3负的法则，还有最后把钱给它视觉化，这些小技巧，这篇不是要教你什么策略的东西，然后所以如果你们喜欢看策略，可能要等其他的这个东西。如果是想要建立一些好习惯的话，我会还蛮建议你们把整个影片看完的。好，那就废话不多说，马上来看影片吧。
If I had to do it over again, I would backtest because it would save me a lot of money. So I learned by getting thrown in the fire, and I certainly threw myself in the fire. And unfortunately, did a lot of testing with sim accounts that I was paying for, and went through a lot of resets, obviously. But I think it's important when you take a trade, always look at the confluence or the reason why you took that trade, and when that trade, win or lose, really go back and understand what worked, what exactly was the reason why you took that trade. What, if you have indicators on your chart, what indicators worked and persuaded you to take that trade? And as you start, you'll start to see that you maybe don't use some things as much, then remove them from a chart. Remove clutter.
Okay.
Clutter needs to be removed. And if you're consistently not, if you have RSI on your chart and you're consistently not using it, then get rid of it. It's not doing you any good. Focus on really what makes you enter those trades, and chart that, journal it. A lot of people don't journal. And back when I started, I would journal the trade and the time of day and if it was win or lose, because I was trying to use kind of the same strategy. So I wasn't too concerned about the strategy, but I was very concerned about the time of day and win or lose, because the time of day is the easiest thing for most traders to correct. Typically traders they have a sweet spot every day where they make money, and they need to figure out what that is, and then not trade the rest of the day. Figure out what that sweet spot is and only trade then.
So you do a lot of journal at the beginning, right?
I did. I journaled everything in Excel, and I actually had when I initially started, I had a plan. I wanted to make $1 million, and so I basically took a spreadsheet and I run it out 120 days. I put 20 accounts on there. If you make $416 per account per day, that's $8,333 per day on 20 accounts. $8,333 per day times 120 days is $1 million. It's simple math. And if you can't do that, just break it in half. Do you want to make $1 million in 240 days? You only have to make $215 a day.
Think about one contract thank you like 200 a day is
quite attainable. It's quite attainable. Right? But the thing you have to do is you have to start looking at the big picture, because what's so easy to do in the moment is you go, well, I made $200. Well, now I think I'm going to try to make $500. Now I think I'm going to try to make $600. And you eventually give it back, right? And then you're starting over again. And that was kind of the emotional journey that I went on until I finally sat down and wrote myself a list of rules. Like, there's no military in the world that goes to war without the rules of engagement. But yet traders will sit down in front of their computer every day with no rules of engagement. They have no reason why they entered the trade. They don't understand why they lost, and they never regroup after the trade to understand. And I think that's super critical, is to understand what are the rules of engagement, how did it work, how did it go, what worked, what didn't, and what are you going to do different next time.
Yeah, I think looking at the overall traders on the market, it's quite surprising. Really, a lot of people that don't really do journals or they don't really track their trades. It's more like just like random motivation sometimes.
There's programs out there like TradeZella and stuff. I never used them, but I've looked at it, and it seems to be quite good.
Quite good, right?
Yeah. And it does a lot of that for you, right? It will tell you, hey, here's where your performance is optimal, right?
Yeah.
So those are all things I think people just need to look at that a little bit more. But they also, you need to write your own list of rules. They need to be written down. And literally every time you sit down at your computer, you need to read those rules aloud to yourself. It sounds crazy to do that. But you know, the interesting thing is in the trading world, trading's a lonely occupation, right? We don't have a lot of support. We don't have people telling us what to do. You don't really have a boss over your shoulder telling you, you know, what the protocol is. So it's a lonely world. So, you know, you always need to find that accountability partner. Even if they don't know anything about trading, find someone that you can reach out to and say, just tell me to stop. You know, tell me to stop. When I call you, just tell me to stop. And that makes it, you know, more real. I had a huge issue with, I would get my accounts up to $1,000 on the day. That's $20,000. And then I would give it back. And so finally what I did is I actually took poker chips and started to stack them on my desk. And once I started to make it visual, it was much more difficult to give it back, because before I made it visual, it was just a funny number on the screen, right? It was easy to give it back.
Yeah, I think when you just look at the number, you don't really feel the money is in
Right.
your pocket, right?
You know, think about this. If you were walking down the street and you had $1,000 US in your pocket and someone came by and they grabbed it and they took off on a run, you are going to do everything you possibly can to get that $1,000 back. You're going to run after them. You're going to do whatever it takes. But yet in the markets, we give it back like it's nothing. Like it's
That's
nothing.
a problem.
We don't even think about it.
Yeah, I think like trading props, or maybe like trading even like live brokerage, like when you just look at the numbers, probably sometimes you kind of really forget what really that is about, right?
Right. Yeah.
And I actually also bought like poker chips after I saw your interview. I think it's really helping you to kind of just go away when you have a good day. And I was
Yes.
thinking even like I should probably do it like more aggressive. Like I can probably just withdraw some cash.
You can
Yeah.
use real money.
Yeah.
It makes it's real.
Yeah, it's real. Like
Right?
if you really earn some money, just put it on the table, and probably you should just walk away.
And let's just hope your days are big enough you don't have enough cash.
So that's one thing that I found very interesting, because I think with Apex you have like consistency
Right.
rules, and there are also a lot of companies has consistency rule, whereas there are also like some companies they are more they have more freedom. But I actually got some feedback from community members saying that having consistency is actually making them to walk away on that day. So some traders they are probably never able to withdraw from those companies without consistency, because what they do is just they try to earn as many as possible, because those accounts probably have a very high limit
Right.
when you can withdraw. And companies with consistency can sometimes help you to stop at the right point. I'm not sure, like, just curious on what's your point that do you think this is kind of essential for traders to success, or when they are in a good trade, they should just let it run as much as possible?
So I learned my number one rule that I teach is a 3-3 rule, and it is a slightly altered rule from Daryl Martin, who founded Apex. He has a 6-3 rule. I went to a 3-3, and basically what it is everybody asks me, how much should I trade on the day? When should I stop? How do you know when to stop? Those types of questions. So the 3-3 rule is it's a 3-win, 3-loss. So if you have one win, if you enter one trade, you have one win, that means you're up one net win. If you enter another trade and you win, that means you're up 2 net wins. Yeah. If you enter another trade and you lose, now you're up 1 net win. If you enter another trade and you lose, now you're net 0 on the day. Anytime that net number is 3 wins or 3 losses, you should stop. So to give you an example, if you have a $50,000 Apex account and you have a 50 tick stop, let's say your stop's $250, and you lose one, you're down $250. If you lose the second trade, you're down $500. If you lose the third trade, first of all, if you lose 3 in a row, you should probably look at your strategy, or you should look at how often you're entering, how quickly are you entering. So if you lose that third trade, you're down $750. You should stop. $750 is a recoverable loss, even on a $50,000 account. And I always I don't want to lose more than I can come back in one day and recover. If you allow yourself to lose what you can only recover over a 2 or a 3 day, that's a longer journey. That's a discouraging journey. Yep. So the same thing is on the win side. If you go in there and you have a 50 tick, and you should have a take profit especially when you have the trailing drawdown, is you need to take smaller profits. So if you have the same thing on the take profit side, you have a 50 tick take profit, you hit it 3 times, you're up $750. Stop. $750. We will go and sign a work contract and work all day long in a factory, in a 7-Eleven, in a Starbucks, anywhere for much, much, much less without even thinking. But yet we'll risk $750. So you always have to think about what are the rules on the day for when do I stop? When can I keep going? The nice thing is about the net rule that Daryl Martin teaches is that it allows you to, in theory, trade all day, because you could win, lose all day and kind of in net zero or commission loss. So it's not, you hear some people saying, well, if I take 3 trades, then I'm done on the day. That's a little discouraging because that can happen relatively quickly.
Yeah.
So the net 3 win, net 3 loss rule allows you to trade more of the day. But anytime, whenever I'm in a trade, if I made $1,000 in profit, I always protect it. So I would pull my stop to protect 1,000. If the market wanted to run, fine. If I made 2,000, I protected 2,000.
Okay.
If it comes down and hit my stop, I'm done. What I did on when I did the $1 million run, I always protected $1,000. That was $20,000 on the day, and I refused to give that back.
And when you say you protect 1,000, usually it's already like at like 2,000 or something.
I would go in $1,000 increments.
Okay.
So if first of all I protected 1,000, then I would protect 2,000. If it went above 2,000, I'd protect that.
Okay.
And by meaning protect it, the second it crossed that, I would pull my stop into profit. Like I wouldn't give myself a 50 tick stop on that. I would, the second it crossed 1,000, I'd pull my stop, just hoping it would continue running, right? But if it came down, if that meant I was only running a 2 tick stop, that's fine. But I didn't give the 1,000 back.